Hey guys, welcome back to Snowball Investing. This is going to be the first update of 2024. As I do in all my videos, I'll touch on the macro, what's going on in terms of inflation, and kind of walk you through all of my portfolios, all of my positions, what I've been buying, what I've been selling, and my thoughts on how I'm going to approach this year in terms of investing. Without further ado, let's jump into the stocks and shares ISA. So this now sits at a value of £73,143 and is up by 16,549. Looking at the monthly chart, we have had a little bit of pullback. We had a pretty amazing 2023, and I've covered that in my last video. So yeah, we've had a little pullback, and that's partially because of some of the inflation data that came out in the US and UK, where it showed a slight uptick in inflation, but obviously it had a tiny bit more of a recovery, but part of that is me adding cash into the account every single month. So in terms of inflation, I think the US is probably in a better position than the UK. I think we are expecting a slight pullback. I'm thinking a 5 to 10% correction. I mean, S&P 500 is at almost all-time high, I think, now. So I think we are due a correction, but I'm still bullish for the end of the year, but we'll see how the market plays out. In order to see how my portfolio is performing, I like to compare my portfolio to the FTSE All ETF, and the best way to do that is look at the time-weighted rate of return, which Freetrade provides you. So looking on the past month, my portfolio is not doing as well. It's down 6.36%, where the FTSE All ETF is down 0.78%. And that's partly due to the high growth nature of my portfolio. And looking on the maximum time horizon, my portfolio is up 25.67, where the FTSE All ETF is up by 4.65. So long term, I am outperforming the market. As my portfolio grows in dividend stocks, it's probably worth tracking this on a monthly basis. December was a very good month. I think it was over sort of £50. Looking at January at the minute, Disney's coming at £2.26 and SL Green Realty at £13.13. Before I go into the individual positions, if you could like and subscribe, that will really be appreciated. It's a great way for my channel to grow and gain audience. So starting off with my biggest position, which is obviously Palantir, I'm up to now 2,231 shares. Overvalue is just below 29,500. And I'm up still a healthy 65.22%. So what's my overall thoughts on this position? So it is now a very big position in my portfolio, and that's for a reason. I'm up a healthy amount, and to be fair, it's had a pretty healthy pullback from the kind of recent highs. So if we look at the kind of yearly chart on this, at the peak it was around 21.34, and that was in November. And if you watch that November update, you'll know that I sold a little chunk of my Palantir position because at that point I thought it was overvalued, but I bought that back in around the sort of $17 range. So I think we're in a position where we're a bit more at a fair valuation. I always said I'd buy a lot more heavily at the $12, $13 range, but I'm not convinced we're ever going to see that again. I'm in two minds whether I should buy before the next earnings. I don't like to play earnings. However, if there is a shift in the macro where everything is hit because earnings as a whole weren't as good, I could see myself buying more around the $15 range. So yeah, it'll be interesting to see how the earnings go. I'll be looking very carefully at customer growth, whether the AIP boot camps have resulted in more clients, and more importantly, the forecast for the future. What are they predicting? You know, are we going to go back to that 30% growth, or are we still going to struggle around the sort of 20% range? I think that's going to dictate where this stock's going to go. But long term, I'm still very bullish. I'm planning to hold this stock for the next 10 to 20 years. So yeah, just looking for the opportunities to buy more stock if I can. Next up, we have the FTSE All ETF, which is up 11.64%. The index are holding up very well, and I think that's partly due to big tech being a large position in them, and big tech is continuing to perform excellent. Going back to Palantir, if Palantir goes back to $12, $13, I will not hesitate to sell all this index fund and put it into Palantir. It's very risky and absolutely not financial advice, but I'm in a position where I can take kind of a bit more risk. So I'm flexible in my approach, and if opportunities present themselves, I will shift my positions around. Next up, we have Truist, which is up 22%. They had their earnings recently. Didn't look too deeply into the numbers yet, but seems overall very positive, and they are cutting 1,000 jobs. And I think that's a common theme we're going to see across a lot of these companies in the earnings call. People are looking to trim the excess fat and become more efficient, especially in a higher interest rate environment. Next up, we have SoFi, which is up 2.31%, and it's finally had a pullback. If you've been watching these updates, you know I do want to increase this position, but I've been very careful about its entry price, as it's a very volatile stock. If we have a look at the price chart on this, and I'm by no means a technical guy, I just try and buy stocks at a valuation I think is attractive. So it went up to, the $10 range back in December, and it's been downtrending ever since. So I've been holding off buying until recently. So I've now started buying SoFi on a weekly basis. With SoFi, they tend to pop after earnings. They nearly always beat. Whether that happens this time, we shall see. But after earnings, they seem to downtrend to kind of a baseline, and it's kind of a repeatable pattern. So at the minute, I am increasing my position in SoFi. SR Green Realty is up 57%. At the minute, not looking to increase this position, just enjoying the dividends that come through. PayPal, that's at £2,671. The CEO recently did a talk on one of the news channels and was very optimistic, and lots of mentions to AI. I continue to DCA into this position every single month, and it's had a bit of recovery, so it's only down 6.56% at this point in time. Looking at some of the big tech stocks like Alphabet, Meta, and Microsoft, they are just continuing to perform. I would be very interested to see what earnings are like. I think they'll be, fairly good. They're going to do a lot of stock share buybacks, especially Google, I think. But the time to buy this was, early last year. So at the minute, I'm not buying any. I'm just holding for the time being. Tesla is down 4.87%. My average price on this isn't fantastic, and it's had a bit of a hit recently, but I'm just holding this for the time being. DraftKings continues to be my best performer. That's up 125%, which is pretty insane to see. Disney trading pretty sideways. I mean, that's up 7% and gave me a little dividend this month, which is very nice. Enphase is down 6.6%. It's had a bit of a pullback recently. I am tempted to start buying back into this. Under $100, I will probably increase some of this position. At the minute, I'm deploying a lot of my cash into stuff that's not the big tech. Stuff like SoFi, Enphase Energy, Rocket Lab, which I'll talk about in a little bit. So, yeah, if the price continues to go down, I will, take advantage and buy some more shares. Next up, we have Dutch Bros, which is up 1.98%. AMD is doing very well. That's now up 88%. And I'm still kicking myself. I sold the, a fairly small position of Nvidia had, but if I kept it, I would have been up a lot more. UK properties up 5%. Persimmon up 30%, so still performing quite well. However, with the recent UK inflation numbers, I wouldn't be surprised if these two stocks have a bit of a pullback. The stock I'm doing probably the most due diligence on, and the one that I'm probably most excited for at the minute, is Rocket Labs. They also recently had a announcement where they secured a $550 million contract with a US government agency, and it's dropping back to the price before that announcement. So I am doing a lot more due diligence. I'm very excited about this, and I wouldn't be surprised if this becomes a good chunk of this portfolio. I'm just waiting for the $4.50 or even below that price to start really putting some money into this, but it's probably not as a safe investment as Palantir was. I still think it's very risky. It's high risk, high reward, so please do not copy me into this position. Definitely not financial advice, but yeah, very excited about this company. And looking at some of the kind of smaller positions, Intel's up 25%. Ginkgo Bioworks, which is a very risky company, very volatile, is down 31%. Not surprised. Apple's up 25%. Boohoo down nearly 60%. Alibaba's taken a massive hit, and I'm actually reconsidering buying some more, just kind of bring my average cost down. I need to reevaluate my position on Chinese companies. Given the government, they are very risky, but the valuation on this is getting, pretty ridiculous. So I'm going to do a bit more thinking around that one. Amazon performing well at plus 28%, and yeah, let's not even talk about Everest Steel. So that covers the stocks in my ISA account. I've got £7,000 cash on the sidelines. I've not been buying very heavily at all the past couple of months, but I have a feeling opportunities will present themselves in the next couple of months, so I'm ready to deploy that cash as and when those opportunities present themselves. Moving over to the general investment account, this sits at £15,913 and is up by a healthy £3,813. As per the monthly chart, not too much has changed. It's not been too volatile. It's pretty much been a sort of flat month for the GIA. Looking at the past month's performance of GIA, it's down 1.91%, while the ETF again is down 0.78. However, on the maximum time horizon, this portfolio is doing even better than MISA, so it's up 34%, where the ETF is up 4.65. Looking at the positions in my GIA, the beast that is Meta just continues to grow. It's up 141%, and I wouldn't be surprised if the earnings are very good and the stock goes even higher. I'm just kicking myself again for not buying more when it was down in that $70 to $100 range, but hindsight's 2020. We've got Alphabet, which is up 27%, Amazon plus 44%. As we talked about, Enphase has had a little pullback, and my average in this account is a little bit higher, so that's down 18.89%. Microsoft's up 48%. We've got Intel up 36%, Starbucks plus 16%, and JP Morgan, I think, is up 39%, which is, I think probably the highest it's been as part of this portfolio. The run to the litter is NEO, which is down 70%. I'm not sure what to do with this position. I think it's been hit so hard that if I throw another 100 quid at it, the average price per share will drop drastically, and I could break even much quicker, but then am I throwing good money after bad? I think I'll do a bit more due diligence on this company, the numbers, the kind of finances. I've not looked into this position for a while. So yeah, I'll reevaluate this. But if you've got any thoughts, let me know in the comment section below what you think I should do with this particular position. That concludes the GIA, so let's look at the Vanguard investment account. The value of my Vanguard account sits at $13,668. I do have a small cash position that I need to redeploy back into the VUSA, as it's not an accumulating fund. But if you don't know, I deploy £200 every single month into the S&P 500 and just let it compound. And it's not doing too bad. It's up £1,722, and I'll continue to do this, and 20 years down the line should get a nice healthy return. So that concludes the January 2024 update. When I do my next month's update, we should get a lot of the earnings out, so I can talk a bit more about my companies and how they've been performing and their earnings. But for the time being, thank you very much for watching, and see you in the next month's episode.